Hello and welcome to our monthly catch-up with Shawn Burns, who is the Portfolio Manager of the Switzer Dividend Growth Fund. Shawn, thanks for joining us.
Pleasure, Peter.
Okay, just for those people who forget, let's recap on the objective of the Switzer Dividend Growth Fund.
The Switzer Dividend Growth Fund is a yield fund and also a quality. So we bias towards quality stocks who pay strong dividends. We expect and strong business models, so we expect repeated dividends in the future. We do target yield, so it has about it's tracking about a 6.5% yield, which grosses up to close to 9%, and we stick towards that yield and quality end of the market.
But you do get some capital gain. That's why we call it a dividend growth fund.
Yeah, I suppose just to split it up of how we manage it, about 2/3 of that is in high yielding stocks, which don't do too much in the capital gain area, but they give off a huge yield. And the other third or so is in lower yield, but we would like more growth out of those. So that's how the portfolio balances at the moment.
Okay, how have you been tracking against the objective?
Oh, we've been paying out lots of dividends. So as I said, it's about 6.5% net, which grosses up to 9%, and that's what we've done historically. And looking forward, that looks like what the current run rate is in the fund. Over the last few months, there's been several buybacks, which is where you sell.
Made you look good.
Especially for low and zero income earners. Yeah. We've participated in them, so there was Rio Tinto, there was Woolworths and Caltex is coming up, and there's a couple of others that I've just forgotten about, but what they do is...
You've got them.
I've got them, they're all coming in.
They're all coming in the portfolio.
And all the franking is going out, so there should be plenty of franking coming out.
And basically, that is, I guess, your competitive advantage in this yield department, because that's your main goal, to look around for those stocks that actually are dividend payers, and a lot of other people haven't got the expertise and therefore they miss out.
Yeah, and also it's a spread of stocks. So
how many?
we about 35 to 40 is that's a good spread. Yeah. It's not too diversified and not too concentrated. Yeah. So we're able to pick spread across industries and companies to spread the risk. The diversification helps in risk and also keeps the yield up.
Great. Okay, so how has the portfolio performed over the past month?
The month we're up a little bit. What we've seen in the market is that a lot of the resource stocks have rallied strongly on the iron ore price, and the REITs have done well. Banks have done nothing. So that's sort of, we've got a reasonably big position in banks. That's pulled us down a little bit against the market. So we're up a little bit, the market up a little bit more. But you've seen the resource stocks be quite strong, and REITs as well, but we do hold a fair few REITs.
Is there any story around Charter Hall?
Yeah, I think that's been our best performing stock. It's done very well. That is a property manager, and so when you and they're very good at raising funds. That's what why we like the story. They start off with a high yield, 6%, and they're a property fund manager. So as interest rates stayed low and volatility in the equity markets, money has moved into property, and they're able to talk to big sovereign wealth funds, big Australian institutions. Who want to invest in property. They help them do that. They place that money. They buy the properties. They manage the properties and get fees along the way for doing that. So it's been as low interest rates and equity volatility has helped that story. Okay,
so the outlook for the portfolio.
I think that we're expecting that franking all to come through from the buybacks. I think that the companies we buy have sustainable dividends. So we're thinking there'll be good franking. There'll be strong business models pumping out those dividends. In aggregate, as I said, that diversification helps. So one company slips up, we've got 30 others to take its place. So I think that we're expecting dividends to slowly increase.
Okay, great stuff. It's good news. Let's hope it works out just as you say.
I hope so, Peter.
That's Shawn Burns, who is the Portfolio Manager of the Switzer Dividend Growth Fund.